Welcome, ladies and gentlemen. Again, this video is just to show you the concept you need to master. And we will go into detail for this topic in one of the other sessions, but this is just a little bit of background to see what you need to master for share-based payments. So let's get to it straight away. So if we think about share-based payments, at the end of the day, where does it fit in? So we will see it is within question 1, section A. We can ask it as part of a question, or in section B, where there's a 25 mark, we can ask it. But please bear in mind that they also show that sometimes share-based payments, they can test as a full 25 mark question in section B. So make sure you understand it. So you need to see that you need to do the recognition and measurement of share-based payments, and also be able to identify or account for modifications or cancellations and the settlement of share-based payments. So when we think about share-based payments, first of all, we need to see what type of share-based payment it is. And then once we understand what share-based payment it is, we can go and recognize and measure it. So the recognition and measurement we will look into. Measurement, you will need to see, you need to understand the difference between equity settled, cash settled, and where there's a choice of settlement, either with the entity or with the person holding the share-based payment, that right to it. We will look at the implications, look at vesting conditions and modifications, and make sure you need to understand this whole diagram for share-based payments. First of all, the share-based payments that we have is we have equity settled and cash settled share-based payments. So you will see that there's quite a lot of definitions that we need to understand. Make sure you go through these definitions and are familiar with those items. When we look at equity settled share-based payments, there's also something telling me what it is, and the same with cash settled. For equity settled, you will see I will get the right to receive goods and services as a consideration for equity of that entity at the end of the day. And for share-based payments, they will have the liability to pay me the fair value for shares at a specific date. And when there's a choice, we will need to see, we need to determine who has the choice specifically. If the entity receives or acquires goods or services in terms of agreement, either the entity or the supplier can have a choice. So make sure that we need to know how to account it from the supplier or the entity's perspective. The share-based payments, we need to make sure that we understand how to recognize them. So the recognition, the journals, very important. So for equity settled, we will debit the expense credit equity, cash settled, we will debit the expense credit the liability. So make sure we understand those parts. And then we need to know what vesting conditions is, because vesting conditions will tell me how do I need to account for certain transactions. So make sure you understand how vesting conditions affect your measurement. So then the measurement, we can see that there's an example of how to measure. So we have the direct method, which is using the fair value attributes of the services that's rendered, or we have the indirect method, where it's valued on the fair value of equity instrument that will be granted. But if it's equity settled, we will use the fair value at grant date, and we will not update it subsequently for fair value. The other hand, if it's cash settled, we will update it for the fair value at the end of each year. So make sure you understand the difference between those two types of share-based payments. We also need to know how to account for transactions with employees. So make sure you know how to account for transactions with employees. Then, if we look at the accounting for cash settled share-based payments, you need to also make sure that you understand what's a share appreciation right, and try to shares that are redeemable. And we need to know how to account for those type of transactions. When we get to the other flip side of the coin, where there's a choice of settlement, we need to make sure that if the entity has a choice, we will use the one where it's a present obligation to settle the transaction in cash. We will always do the following. Decision tree to see when the entity has the choice. Is there present obligation to settle in cash? If yes, we will treat it as a cash settled share-based payment. If no, we will treat it as an equity share-based payment. So make sure you understand that part specifically. if the counterparty has a choice at the end of the day, we need to make sure that we know how to treat this as follows. Because they have a right to choose whether it's a share-based payment or cash payment, the entity has that we will grant them a compound financial instrument, and they will need to be able to split between the debt component and the equity component. Make sure that there's a compounded financial instrument the moment that the entity that has or the counterparty has the choice for the settlement. Make sure you understand vesting conditions, what vesting conditions affect your measurement of share-based payments. Make sure you also understand what's market conditions. Go and work through those examples. Make sure you understand how deferred tax is affected if you go and work through that specific section. And then we need to see the link with the ethical financial reporting. So in relation to share-based payments, because directors or employees can get those shares based or payments based on performance, it's always a risk of self-interest to manipulate financial statements so that it shows that we have a greater return, so that we meet our vesting conditions and achieve certain profits so that we get this. So there's always a link here with the ethical issue for self-interest and manipulation. So make sure you understand that link with the ethical part of this study or this specific module as well. So go and work through the study unit. Main thing is, if we go back, and I just want to jump to that slide so that you see it, is we need to see three important things according to me. So firstly, we need to know how to recognize. So recognition, very important to see how it's different between equity and cash settled share-based payments. And then we need to understand the measurement and how to account for the measurement for equity and cash settled share-based payments. And then the third one that I think is important is where there's a choice of settlement. We need to know how to treat it from the entity's perspective, and we need to know how to treat it from the counterparty's perspective. So make sure that you at least understand those parts. And in my opinion, that's the massive or the more difficult part of share-based payments, where there is choices. So make sure you are focused on that part specifically and know what is expected. So I hope this helps you to just see the outline for share-based payments, and we will get to covering it in detail once we get to that specific study unit. Have a nice day, keep well, and cheers.